joined again by John Loos, Economist, FNB. And John, I love having these conversations with you because you bring clarity to the round table. And so the question I'm going to ask you right now is to identify maybe 3 or 4 pressure points in this economy, which is restricting sentiment, restricting growth and progress. And then we can talk maybe about the solutions around them.
Sure, Craig. I don't know about clarity, Craig. Sometimes I pose more questions than answers, but let's give it a bash. I think what you got to talk when you talk economy, you've got to talk cyclical, the sort of short-term cyclical pressure points, which are often very different from the longer-term structural pressure points. Okay.
So what does that mean, John?
So right, let's start off with the cyclical pressure points first, the short-term fluctuations in certain things that come and go.
Yeah.
And there we're talking about interest rates. We're talking about inflation and interest rates.
Right.
2 sources of pressure on inflation, both really globally driven. Petrol prices emanating from a big oil price spike earlier in the year. It had partly to do with a recovering world economy, and then later on the Ukraine conflict and the boycotts and sanction issues on Russia. So that was the oil price spike. It's still Brent crude still hovering up, going up and down above $100 a barrel. So it's quite high. Petrol prices are still high.
Right.
That's been a key driver of CPI inflation.
Right.
Then there's been a global food price inflation surge, also Ukraine linked in part because of a disruption to a big part of agricultural supply globally. Okay, so that's big inflation surge, and we're at 7.8% CPI inflation rate. We were at about 2-point-something% in May last year. And with this rise in CPI inflation, not only that alone not only takes a chunk out of disposable income, purchasing power, which is a direct implication for retailers and retail property, but then the interest rates have also risen because we've got a CPI inflation target, or the Reserve Bank has a CPI inflation target. So we've had 200 basis points worth of interest rate hiking, and the bank I work for, FNB, expects another 125 basis points worth of hikes in the near term. That will be 325 in total. So,
when you say near term, towards the end of the year, or
no, well, in the next meeting and the meeting thereafter, by the end of the year.
By the end of the year,
yeah. So those are the immediate source of pressure on the economy at the moment. Of course, coupled to this, the energy prices and the food prices and rising interest rates affect the whole world. A lot of central banks are rising their interest rates as well. They've all got inflation, or a lot of them have got inflation targets. So this is all dampening the world economy, and that dampens our demand for our exports too. So we get a dampening effect via the world economy too. And we've seen it in a lot of high-frequency indicators that economic growth has probably slowed significantly when we get the numbers for the second quarter. So that's the short-term sources of pressure. Energy price fluctuations come and go, food price fluctuations come and go, and they can come and go fairly quickly. The longer-term issues are more that's been a longer or a bigger concern for South Africa. It's the structural issues, and those are the things that fuel longer-term economic growth in South Africa. So the electricity sector would be a key one. We've had problems with electricity supply since about 2008, if I remember correctly. A combination of load shedding plus rapidly increasing costs in electricity supply as well. There are others. A lot of them have to do with parastatal, state-owned enterprises. Those are the areas of the economy which are not performing particularly well, where they're dominated by an SOE. Transnet being another one. The ports have had their issues. The railways barring a few mineral lines, has virtually shut down. It's not far from that.
So our arterial touch points are virtually non-existent.
Well, on rail, yes. And one could go on basic education, and so the skills base of this economy isn't growing as fast as it should, and this is a skills dependent economy. It's a services dominated economy, which is skills driven. So there's those longer term structural challenges, and they've been taking their toll on our economy over the past decade or so. Not enough infrastructure spent, so a lot of infrastructure is aging. Be it water infrastructure, water supply, road infrastructure in many regions. You know, a lot of it is creaking under the pressure, and you know, there's not enough fixed investment either. So those are the longer term issues, and we've seen as a result of that, you know, forget about COVID. That was another abnormal shock. But even before COVID, we saw this stagnating economic growth since about a decade ago. There was a mini recovery in economic growth after the global financial crisis recession. It hit a peak of about 3.5% GDP growth in 2011, if I remember. And since then, it's broadly been on a stagnating path.
But yet, you know, the decline in the world economy has reduced. Does that make us a global player in South Africa with the level of water being lowered and not the bridge being raised? Does that bring us to par with the world?
Well,
anybody that I know, or the people that I know that have traveled, that have come back, that have said, you know, as bad as it is here, it's worse there.
Well, it depends where. I mean, you know, the world is a big place with a lot of countries.
But it's easier to make a rand than a dollar. I mean,
well, I mean, there are some who start looking at when certain other emerging economies start falling apart. You know, Sri Lanka being in a big crisis debt-wise at the moment. You know, then it can be, and China showing cracks. Huge levels of debt. Debt is the big crisis in the world that's brewing,
and it's global.
And it's global. And while certain countries that default possibly, you know, take the spotlight away from a place like South Africa, we mustn't underestimate our levels of debt either. We're not at crisis levels, but if you look at corporate, commercial sector credit with banks, lending institutions over the past 30 or so years, one stage it was 20% of GDP in the 90s, now it's 40% of GDP.
Okay.
Government debt the debt to GDP ratio has been going up rapidly over the past decade, just over a decade. Household sector debt to GDP, or debt to disposable income, is not as high as what it was after the housing and consumer bubble of 2008, but it's still relatively high. So we do still have high levels of debt. But yes, we're not in a debt crisis at the moment, as some countries are starting to hit. So that sometimes just takes the focus away from South Africa, but I don't think one should become complacent about that. I think, you know, here and abroad, many are well aware of the lack of infrastructure investment, for instance, and the lack of performance of state-owned enterprises, and know that if that doesn't change meaningfully in the not too distant future, our economy just over the long term just carries on stagnating. Electricity is crucial, infrastructure is crucial, transport is crucial for the long term performance of an economy.
So, I mean, if you were president and you had the power to make certain decisions and you were steering the ship as such, what would be the three fundamental focus areas that John Loos would look at and make a priority on his agenda?
Well, I think that the ones that I would identify first, possibly he is starting to make a priority. We are starting to see some early encouraging signs. I think a lot more needs to be done. So I have a basic, if I can explain it in a nutshell, my basic philosophy, which I believe in, is that there's a certain government has a place and the private sector has a place. The private sector's job is to deliver the services and the goods. The government sector's primary focus is to regulate. That's the
obstruction.
That should not.
Is it obstruction?
No. It's not necessarily obstruction. Look, a free market can be shambolic.
Okay.
A free market can end up not being a free market.
So regulation is good.
So regulation is good. No laws, no regulations, and you can have some worst case scenarios. You get some warlord type
anarchy,
who seizes the market, controls it, becomes a monopoly, and chases everybody else out. You know, that's a doomsday scenario, but it does happen.
So regulation is a good thing.
Regulation of markets is a good thing. Let me give you a simple example. The one industry I like watching the most, the professional sports industry.
Okay.
FIFA is the government, the regulatory body, or the IRB or the ICC, whatever it might be. They're not perfect, but they clearly stick to regulation. And the private sector of sport, if you could call it that, is the clubs, the competitors that play the game in a well-regulated competitive environment. A free market in professional sport terms would be something like, okay, just carry on with your doping and your cheating and everything as you please. That can't work.
Right.
It'll be the end of the game. So well-regulated competition is the principle in my view. And where we do have well-regulated competition in South Africa, we sometimes have world-class sectors.
Ah, okay.
So, I mean, the banking sector. Now, you might not like us, but you don't have to. But the point is, in global competitiveness monitors let's put it the broader financial sector in this country, which is highly regulated, well regulated, not perfectly regulated, but it's often rated as one of the best in the world.
Yes.
That's the reality. I mean, that's not me saying it. It's global competitiveness monitors.
Interesting.
That's a country, that's a sector that performs with the same labor laws and all the same tax laws and everything that other sectors have in this environment. What's the defining principle? Well-regulated competition. The right sort of healthy competition drives performance up. Okay, and that you get in professional sport as well. When you've regulated established a competitive model where strength versus strength and the weak are protected in lower leagues, whatever the case may be, a lot of thought goes into it. You can get a great product and a great service to the fans, to the spectators, to whoever. So I think that's the guiding principle.
That's a good sector.
Yeah.
I mean, the banking industry is just right up there.
Yeah, and our retail looks pretty good too. There's a lot of services sectors that look pretty good. I
remember when Walmart came in and they acquired the percentage of Massmart, and now it's being transacted again, hopefully. But they said, look, we can't teach you about retail.
There you go.
We can only teach you about logistics because your show is good.
Yeah.
I mean, the stores were just pristine at the time, and they still are. So that's an interesting indication, which reflects to banking as well. The standard is just international.
We might be a little bit behind here and a little bit behind there in retail or whatever, but it's there. It's a good product.
It's universal. It's standard.
It's when you go into the industries where there's a protected monopoly, protected by the state, propped up by the taxpayer. That's where you start to run into problems, and that's what Economics 101 tells us will probably happen. And that's where those areas. So the electricity sector, for instance, the railway sector, the ports, you can see a lot of it. That's what needs attention in this economy,
and that's what you would focus on. I mean,
and I think that's what's starting to be focused on. The announcements recently about independent power supply being sort of enhanced, and fortunately in South Africa we have a vibrant private sector.
Yes.
Some less developed countries than us don't have that. So if government doesn't provide something, it just doesn't happen. In South Africa, most stuff that is not provided by government, if government allows it to be provided, it normally is provided.
Sure.
So we've
but it is proof in the pudding that they can regulate and get systems up and running. I mean, SARS is a clear instrument that works efficiently and effectively.
And the Reserve Bank and
the Reserve Bank. So there are clear sectors.
Absolutely. So it can be done, and that's the model.
Okay.
You get the right level of healthy competition, not free competition, because that's murderous sometimes. That can kill an industry. It can make it horrible. But the right level of competition drives human performance up.
Right. Right.
We've seen it in sport. We've seen it in a lot of other industries too. And what's right differs from sector to sector. The electricity competitive model won't be the same as a banking one.
Sure.
So the devil is in the detail. But that's the guiding principle. What's been happening in South Africa is that this vibrant private sector I talk about has to a large extent been replacing state-owned enterprises in various ways for many years.
Yes.
The only unfortunate thing is I would like to see a lot more freight on rail. I think that's potentially the most efficient, but rail was not performing well, so the private sector came along and replaced it with road freight. That was the best one could do. And now you're getting the electricity parastatal slowly being replaced by private sector independent power producers.
But what you're saying is that there is a foundation, and that things are beginning to seem that they could come together.
Absolutely.
And that the country as a whole is a lot larger than we are, and that there are more people around the table that want things to work that don't.
Yeah.
And this is exciting then. This is positive.
And I think you've got a government that's increasingly realizing, maybe, whether they're grudgingly accepting or not, that this is slowly realizing that this is the way to go.
Yeah.
That the private sector needs to be involved in a lot more delivery, because the South African private sector, by this continent's standards anyway, is very strong. Very capable. It's a very well diversified and developed private sector. Services, which are the sort of the indicator of the highest level of development of an economy. The services sector is 2/3 of the economy. So it's not just a primary sector, mining dominated. It's a highly developed economy. It's just not big enough to employ enough people, but it's highly developed. So, technologically and in all ways, a lot can be delivered if they're allowed to. And so what are we seeing? We're seeing more signs of independent power producers being allowed in greater numbers. And then all these other solar solutions, and that for our houses and for businesses, they come. What we're seeing in transport, well, besides road freight that's replaced rail freight to a large extent, but now you're starting to see Transnet talk about slots on the railways for private companies. But from what I read, the conditions of these contracts as yet won't be good enough by the sound of it. But it's a signal. It's a signal that slowly but surely they're starting to accept that private sector is going to have to do this. It's just that, we need to come to a better arrangement, and there's more private sector involvement looming for the ports as well. So the signs of structural reform are now starting to
manifest.
Arrive. And so you would expect at this time, when the economy has come under pressure for the past decade, unemployment and poverty are rising, and with it, the voters are starting to change in elections they vote for. Okay. So that brings about a sort of a pressure on government to reform the economy. It's all these things are linked.
And of course, all these media platforms are also confrontational now. So you can ask questions in real time, you can confront people, and in essence, what happens is you can communicate. So you have a voice. So it's not just standing in a voting booth to cast your vote, but you can in real time cast your voice and opinion. People are frustrated.
Sure, and it's a highly democratic country, and it's a highly free speech country. So yes, we can.
We ran an auction last month, and to my absolute astonishment, we were a capacity crowd. We had bids on almost every single property, and I had a great conversation with Norman. And I said, "Look, could this be the light at the end of the tunnel? Could this be a sign?" And it was a throwback to how it was in 2015, where everything was just buoyant and the future was promising. And I'm also seeing that. I'm feeling that people have just realized they've got to make things happen. They've got to work with what they have, and the expectation of what was is different to what is. And I think the minute you come to realize that, the minute you go into any environment and you have an expectation of how it was, I think you're kind of going to be downfalled. You have to view things as they are and then try and build from where they are.
Sure. Look, 2015, I wouldn't have seen encouraging signs at that point. It was still serious resistance to the positive economic structural reforms. Now I do, though. Now I think it's becoming clear. And I hope that, obviously it's, let me make it clear, it's not enough yet.
Yes.
It's not enough to turn things, but it's about the signals that are starting to emerge of change that is possibly looming. I think we have to be realistic about timeframes. These type of things are not as simple as you cut interest rates and the economy grows faster. These things take quite a while. It's a few years before you see a significant increase in the capabilities of the electricity sector. It's not just tomorrow.
But it's what happens from what we do now.
Sure.
that we'll see in a few years' time. It has
Absolutely.
that delayed effect.
Yeah. So I think when I sit here and I talk about these structural reforms, that the signs are starting to see of a shift in policy thinking. Don't expect to wake up tomorrow and see things improve meaningfully yet. It's a process. It's a process.
And I love when you talk about retail, because I come from that industry, and we always had this philosophy that we needed to create an experience as customers walk into the stores. But obviously Walmart have seen this more so than ever before. And I mean, with this potential acquisition of Massmart now, I mean, what do you read into that?
I'm not sure what to. There's been various acquisitions over the years all along.
It's a big acquisition, though. I mean, it's probably one of our largest retailers.
It is a big acquisition. I guess it shows some sort of optimism in the longer term for South Africa. One would hope that there'd be more of this type of interest in various sectors. But I suppose that's one thing it shows, and the other thing it shows too is that anywhere, if the price is right, the investment can be good.
Sure, absolutely.
It's all about the price. So I don't know the details of Massmart's price, but there's definitely I do think we've got a lot going for us, and as I say, I do see encouraging signs of a policy thinking shift.
Yeah,
and that's all important. That's all important.
Absolutely.
That's what we've been, as economists, that's what we've been waiting for many, many years, is to start seeing encouraging signs.
Yes.
And we mustn't get ahead of ourselves now. It's not, what's happened to date is not nearly enough to really, it's not going to make us a Chinese growth economy tomorrow.
Sure. But I do believe it's equally, when people do travel, and to get on flights not easy today, because flights are all booked and they're all full. When you come back and you see where the rest of the world is, it surely motivates us to get our act together, and it surely gets us to realize that it's highly, highly achievable to make this thing work here.
Oh, sure.
You can make things work here. We do have a network, and we do have opportunities, and there are vast amounts of people that want to grow and prosper, and
sure.
So the competition is, I would say, less here, but more entrepreneurial, potentially platformed here than anywhere else in the world.
Well, I wouldn't say anywhere else in the world, but I don't know every country, but yes, I mean, I think there is I wouldn't like to arrive in the UK tomorrow and suddenly, bang, here I am. I mean, it wouldn't be easy. It wouldn't be a day at the beach. Look, various private sector people have various practical issues they deal with, when they're dealing with a council or whoever, and they'll tell you horror stories, and in some cases that I can't fault them for it. Often, though, in developed countries you have a different type of challenge. It's highly effective civil services with a lot of red tape, environmental regulations, tax, and all sorts of stuff, and they are effective, and that too can create, its own challenges.
Sure.
You can struggle to get things done in some cases too.
Yes. So the playing field is pretty level now. I mean,
but what you're also seeing in South Africa is dramatic differences between regions in ease of doing business, I think. There are some municipalities which really work well, many of them down Western Cape Way.
Okay.
There are many which are reportedly dysfunctional, and they're properly dysfunctional. So it ranges from pretty good, I wouldn't say,
But it also creates an industry around the dysfunctionality, which is...
when you've got to supply your own water, and South Africa is sort of, the regional performances are vastly different too, and that can dramatically, influence the ease of doing business. Is it easier to do business if you're working in, say, Paarl municipality in the Western Cape versus, some old Free State town, which, where the railway's closed down and it's really gone backwards, vast, dramatic differences. And now you're starting to see a shift, I think, in businesses and individuals looking for these places that work.
Yes, absolutely. They want functionality.
Yeah. So you
because functionality is profit, really.
Yeah. So I think what we're seeing is not just a one-way semigration to the Western Cape. Yes, you are seeing that of a lot of high-income, middle to high-income individuals. But then business movements as well. I think you're seeing some movement of businesses from smaller towns in the rural, the Platteland regions, municipalities which can't supply them with the services for their business, and migrating more towards Gauteng or KZN, the big metros. You're seeing that as well. Hopefully that creates some sort of competitive pressure amongst councils. In the US now, you've had California having reportedly not such great laws for businesses, and a whole lot moving to Texas.
Yes, and the tax structure as well.
And I would assume at some point California responds with a better deal. If you can start to create that type of competition. Competition isn't just in the private sector. In government too, you can create competition, like between councils looking to attract business to their councils. And I'm hoping in future you'll see more of that too.
That's interesting. That we need to discuss and unpack.
Where a council starts to say, guys, we're losing big businesses to council X down the drag. We need to, this is our rate space going.
Sure.
We need to do something. So interesting changes possibly.
So, John, it seems that the water is not as murky as as we're accustomed it to be, but that there is light at the end of the tunnel. And these conversations are just enlightening for us, for me specifically, because they just spark so many questions. And I'm excited to always have you at this round table. And thank you very much for your input, your insight, your knowledge, your wisdom. And I want to ask you one last question. Are we more productive with the tech available right now? I mean, I go back 15, 20 years and I look at myself and I say, besides the convenience of an email, but I was equally as productive 15 years ago as I am now.
Interesting. Well, I think we have I think we are far more productive.
Right.
The technology enables labor to be far more productive. Often, unfortunately, in some cases, it can create more unemployment because fewer people can do more work. So, and that is the purpose of a lot of information and communications technology, is to increase labor productivity, or do without labor almost, in some cases. So I think we are more productive. Are we utilizing the technology to its full extent? And there I say no. I mean, not that I'm knowledgeable about this technology, but I think that it's got the potential. Its potential to enhance our productivity is, it's just grown infinitesimally, and because the companies we work for don't necessarily know how productive we can be with all this technology. Sure. Targets and budgets and everything are normally set on last year plus X%.
Right.
Not a sort of totally new thinking of how productive can one actually be with all this technology you have. That's not a question that gets asked. It's last year plus X%, and so we grow more productive as time goes by. But
with numbers, but not with activity technically.
But what happens is, some piece of technology may have improved your potential productivity by 100%, but everyone's happy if you in actual reality go up by 20%. They're like, wow, this is great.
Sure.
Is it great? Tough to say. For instance, let's just take a very simple example: Teams and Zoom.
Yeah.
Now they have the potential to greatly enhance a person's productivity in the day. What am I talking about? I'm talking about driving for an hour for a meeting in Pretoria, and having an hour meeting in Pretoria and driving an hour back. That's how we used to do things before COVID.
Yes.
Okay. So 3 hours for a 1 hour meeting with a colleague.
Yes.
Okay. That does not make sense.
And cost.
Why did we all do that before COVID? Because that's the way we'd always done it. Teams and Zoom were there well before COVID. They existed. Some of us knew about them. Some of us even tried to use some of these things, and it was unacceptable because everybody else had always done it the face-to-face way, and therefore we always drive to business interactions and waste time in our cars. Okay, there was no reason for it except that this is the way things have always been done.
Yes.
Into COVID, and we all got told, shut down your offices and go home. That's it. How are we going to manage? Make a plan. Suddenly,
everything was elevated.
Overnight, you realized there's this Teams, there's this Zoom, there's this, there's that.
We'd never heard of it before.
It's all there. So the potential to improve your productivity in a day was there. No one cared. They were forced. That's just one example of a technology. We got forced into using this bit of technology to improve our working day's productivity. And we all suddenly discovered, wow, this is easy. I don't have to drive across the city to see Craig.
Yeah,
I can just go on Zoom. This is easy as that.
Although we prefer having you here, John.
No, that's great. So no, I don't. I think because people are creatures of habit, and old habits
they
die
remain
hard.
in the cage.
Yeah, it's a push to get them on. And you see it all over. You still see branch banking. Some people going into the branch to do their banking when there's online banking, which is much more effective.
Yeah.
And it's a process. The change in people's habits comes a lot slower than the change in technology.
Sure.
And so are we as productive as we could be? I think the answer is, generally speaking, no. We've got much greater potential because of technology, and the Zoom and Teams is just one small example. I'm talking about all over the place.
Sure.
Everything you can imagine, whether it's Excel, whether it's any bit of stuff you use, you're only using a small portion normally of the potential of this thing. So,
Sure.
So I think that's the answer.
What a fascinating conversation. John Loos, thank you so much for joining us.
It's a
FNB
pleasure.
Economist, Insight and Value, as usual. Thank you.
Cool.